Welcome to Upticks. I'm Jake Falcon, the founder of Falcon Wealth Advisors and your host of Upticks. Today's episode 137, Health Insurance with Caprice Black. Okay, thank you all out there for joining me back on another episode of Upticks. I've got a special guest today, Caprice Black, who's been in the healthcare industry for 15 years, and the name of her company is JRS Healthcare Solutions. So thank you, Caprice, for joining me this morning to talk all things health insurance.
Yeah, well, thank you. I enjoy being here and I look forward to the conversation.
Awesome. Thank you very much. And before we dive in, both Caprice and I hope all of you out there are staying safe and healthy during this horrible pandemic.
Yeah.
Okay, so for today's topic, to jump right in, Caprice, many of our clients are looking to retire in their 50s. Mm-hmm. And the number one question that I would say that Corey and I get is, Jake, what am I going to do about health insurance? So, obviously the costs have gone up dramatically over the last decade. And so I'm curious, maybe where should people start? So let's say that a client's 55 years old and they're looking to retire from their company. What do you typically advise them on as far as taking care of their health insurance?
Great question, because I get that a lot as well. So when that comes to me, that type of question, my recommendation is just don't jump into COBRA, okay? And it might not be the best option for you in terms of finance. You're familiar with the plan, you know the deductibles, you know the networks, but financially it might be very expensive. Today, there's some alternative options that you at least would want to compare before you sign any documentation in terms of enrolling for at least the next 18 months. So depending on household income, you could possibly look at plans through healthcare.gov. Now in Kansas and Missouri, we use the federal marketplace. And there you may qualify for advanced tax credits depending on your estimated household income for the current year you're in. Most times people ask me, is it based on last year what I made? No, it's based on the current year that you're currently in, and it's an estimate. So you do the best that you can. And just to let you know, with the signing of the American Rescue Plan that they just signed into law, the subsidies are going to be expanded to more than 400% of the federal poverty level. So that for a household of two, that's $68,000. But now it's going to be expanded. Plus the subsidies are going to be increased. So you definitely want to look at that one option.
So let me interrupt real quick if you don't mind. So would you also then potentially suggest that if someone's looking to retire, perhaps they do it early in the year, that way their income is low, right? So, if I have a client that works all year and they make six figures, let's say they try to retire in October, their income's already going to be pretty high. But if they retire earlier in the year and maybe they have a trust or after-tax money to live off of, then in fact their income can be quite low. Is that something that you talk about?
They could do that, but that's not always the case, right?
Sure.
So in a situation like that, again, is possibly if the COBRA plan is the more affordable option, you might do that for November and December. And then during open enrollment, you would want to revisit it because then you could enroll into a healthcare.gov plan for 2022. And now it's a whole new year and your income is completely different.
Got it. So COBRA's 18 months. So that's definitely something they could theoretically opt into and then go shop and switch after that.
They can.
Okay.
But again, it's always good to get advice, talk to an agent or a broker. Their services are free to you. So why not utilize it?
Right.
They're there, they specialize in that field, and they'll be able to give you good advice. So I'd always would recommend to speak with somebody before you make any decisions.
Got it. Okay, good. Thank you for that explanation. All right, so carry on here. So if when I have a client and they're looking for health insurance and they're coming off their employer plan, one of the questions you have to ask are, what are your healthcare needs? Mm-hmm. Okay. So if you're somebody who has some pre-existing health conditions, and a pre-existing health condition could be just taking a daily medication that you've taken for years, but you're taking it for a chronic health condition, and therefore it's considered to be pre-existing. And there's always a 12-month look back with insurance companies.
So if you want to have a health condition covered, your options will either be your COBRA plan or the plan through healthcare.gov as an individual. Okay. There's no pre-existing riders in those two options. Now, if you're somebody who's healthy or hardly use health insurance, so you have to understand what your healthcare needs are, what you normally spend per year on out-of-pocket costs. You could look at alternative options. In this area, you could look at short-term plans. Maximum term is 12 months. That means you apply for a short-term plan. Now, you have to understand short-term plans are just gap inexpensive plans. They're inexpensive for a reason. They're not going to cover a pre-existing health condition. They're not going to cover maternity. So you have to understand when you're buying one of these lower cost plans, they're lower cost for a reason, right?
Get what you pay for.
You get what you pay for. So if the premium looks too good to be true, it is too good to be true.
Got it.
Because you cannot negotiate with health insurance. It's just they will either cover something or they don't. But if you're really healthy, you could look at short-term plans, just understanding at the end of the 12-month term, you're going to have to reapply again. And if you do develop any health conditions during that 12-month term, it now becomes a pre-existing in the next 12 months. So that's a consideration that you have to understand. They're great options for some people. You can also look at healthcare sharing ministry plans. There's over 100 of them out there. Ministry plans are just membership programs where members share the medical bills of the members in the ministry.
Right. So you pool all your money together, right? Is that how that looks?
What it looks like, and I personally am on one of those as well. What happens is, because it's not insurance, you can't use insurance words. Okay. And the one thing you have to understand, there's no guarantees that any medical bills will be paid because it's a membership program, and you don't have any, you can't just go to the Department of Insurance to make a complaint. It won't work that way. But given that, what happens is, depending on the program that you choose, you'll have a monthly share amount, which is kind of like your premium that you would pay every month. It gets deposited into an escrow account. And then when another member has reached their household portion, which is like your deductible, then the bills get shared. And the ministry will take money out of my escrow account, somebody else's escrow account, and that's how medical bills get shared.
Does that cover pre-existing conditions?
No, there'll be riders on it for a few years anyway.
Got it.
I know personally mine won't cover pre-existing for 3 years, and then it's only going to cover so much, a limited amount per calendar year. Won't cover prescriptions. So if you're somebody who takes expensive medications, you're not going to want to do that option.
Right.
Okay? So it's very, very specific to your individual needs.
It sounds like it. And I always talk with our clients how financial planning and retirement planning is very customized and individualistic. I mean, you're taking this to a whole nother level. You just rattled off 4 different ways, right? So you had COBRA, healthcare.gov. What was that GAP plan?
Short-term policies.
Short-term policy, and then the ministries, right? So all work a little differently.
They're all a little bit differently. The other option you have especially in Missouri, you have these indemnity type of medical plans. And again, they sound very exciting because they have no deductible. But in a hospital or hospital medical indemnity plan, the insurance company is paying a fixed dollar amount for service. So say I go to the doctor's office, it's paying $100 for office visit. But if my doctor's visit's $200, I'm responsible for the other $200. It's a good option for some people who just don't want to have deductibles, and they're looking more for day-to-day coverage versus catastrophic. And that's the other thing. You have to decide what's important to you. Is it more the day-to-day coverage you're looking for, or are you looking just for a plan that if something serious catastrophically medically happens to you, you're going to have coverage? So
Got it. Very good. And working with a health insurance agent or broker, you're going to be able to walk them through all that options and make sure they're appropriately covered on all their bases.
That is true. And the big thing you have to understand, Jake, is cost should not be the only driver of something. So when you're choosing a plan, you're looking not just on the premium, but what are your out-of-pocket costs that you potentially could have that could occur over the year? I know everybody thinks I'm healthy today, but things happen tomorrow, right? That you don't even expect.
Right.
So just don't always go for the least expensive premium. When you choose plans, you want to make sure your providers are in it, the hospital systems that you want are in it, your prescriptions, if you're taking, are on their formulary, what your out-of-pocket costs would be, either copays or co-insurance. And
Got
copay is
it.
a fixed dollar amount, co-insurance is a percentage of your medical bill.
Right. Wow. So that's definitely a lot to consider. So let's that's fantastic. So basically they would set up an appointment ideally before they retire, right? That way they can weigh COBRA and these other options.
It's a good idea. So you can do your own budgeting financially. So you can
Right.
talk with your financial advisor.
Right.
This is the kind of cost I'm looking at. And should I
And
be
then we can
retired
plug that.
now?
Exactly. Then we can plug that into the plan and see how that
Yeah.
impacts it. So let's switch gears. Okay. So also a big group of our clients have to navigate Medicare every year. And I know that's a whole nother jumbled mess in itself. So why don't you talk about, so let's say somebody's turning 65 this year. When should they start engaging with Medicare, and what does that initial process look like? And then what are some maybe tips when they're
Sure.
looking at Medicare moving forward?
So Medicare, great market. I love working in that. When you're going to be turning, well, there's two ways you can get onto Medicare. If you've been on long-term disability for 24 months, you're put onto Medicare in the 25th month. But most people will get onto Medicare when they turn 65, unless they're continuing to work. And that's something they have to review. So there's two different ways you would enroll. Depending if you're collecting your Social Security benefits, you'll automatically be enrolled into Medicare. About 3 months before you turn 65, you'll receive your Medicare card, your red, white, and blue card. However, if you're not collecting Social Security benefits, you're going to postpone it till full retirement age or later, you would have to manually enroll into Medicare. That frame starts 3 months before the month you turn 65. So if you're turning, and Medicare will start the first of the month that you turn 65, not on your birthday. I often get that question.
Okay.
So your initial enrollment begins 3 months before that month you turn 65. There's 3 ways to enroll. The easiest way is electronically online through the Social Security website. They will require you to have a My Social Security account before you can enroll into Medicare only. That's the easiest and the most efficient and time-saving option. The next options has been a little bit more difficult due to COVID this past year, is you can make an appointment with the Social Security office in your area and go down and speak to them, or you can call up and make an appointment with the Social Security. That you're usually down about a month down from there.
Got it.
Okay. So
do you help people with the enrollment process online?
I do. I did somebody I helped somebody yesterday, but my problem was, for some reason, they were not accepting her enrollment period now. So she's going to have to call Social Security.
Got it.
Because they wouldn't accept her information. But most times it's pretty straightforward. I would probably call them or meet with them if you're getting it through your spouse. Your Social Security is through your spouse, but you're enrolling into Medicare under your name.
Gotcha. Okay.
A little bit more difficult there.
Okay. Makes sense. And so as they go through this enrollment process, aren't there several choices they have to make or decisions they have to make as well?
They do. Okay. Back to the enrollment period. Excuse me for a second.
No, you're fine.
Okay. The initial open enrollment is 7 months, and you have to be aware of this. So it begins 3 months before you turn 65, the month you turn 65, and 3 months after.
Okay.
Now, if you wait to apply in the month that you turn 65, your benefits will not start to the next month. So you have to watch that time frame. So now you're enrolled into Medicare. You have your Part A and Part B. And that's just known as Original Medicare. It's a foundation insurance. It's not expected to cover all your healthcare costs, and it's not free. You'll have a premium for your Part B, and that's dependent on your household income. So if your income as a couple is under $176,000, the base premium for Part B is $148.50 this current year, but it goes up every year. And then if your income is above that, and often if you are received a big bonus, you sold a business, you had a payout because you had all this vacation time, that can affect your income.
Sure.
So if your income is above that 176,000, they will, Social Security will have an initial determination, and they'll add an income adjustment onto that premium. That's known as IRMA. Now, you can always appeal it if you disagree with it, but they can adjust an income adjustment onto the base premium depending on household income.
And that's year over year though, right? So if you had a big
Year
year, it
over
could
year,
go
they
up,
will review that every
and
year.
it'll go back down if you had
Yeah.
your income goes down. Okay.
And again, as I said, you can appeal it if you disagree with their initial determination. There's a
Got
form
it.
you fill and you submit, and they revisit it.
Got it.
Okay, so now you have Medicare Part A and Part B. Medicare has deductibles, it has copays, it's co-insurance. So people could add additional insurance, and my recommendation is to do it because you want to be able to cap your out-of-pocket costs in case you have some major medical bill. You get cancer tomorrow, and if you only have original Medicare, you're going to be paying 20% of all your chemo treatments. And Medicare doesn't cover prescriptions. So if you're on medications, you're going to need a drug plan. So you have original Medicare, and now you're going to look at options to cover your max out of pocket to protect yourself financially. So you have two options. Option number one is you stay with original Medicare. That means your claims under hospital or medical services, Part A or Part B, are submitted to the federal government, and the government will pay those claims if they approve them. And then you buy a Medicare supplement plan or a Medigap policy to come and pay that deductible, that co-insurance that Medicare doesn't cover on that approved claim.
Okay.
And you buy a drug plan. That option is you pay up front for your care, and then if anything does happen, you've paid it through your premiums. So as for the risk adverse, is for somebody who likes predictability of costs. It's also good if you have a lot of out-of-pocket healthcare costs, because if you have original Medicare and a supplement, pretty well everything's all covered 100%. Okay. Option
Even
number,
if you have pre-existing too, that'll all cover that?
there's no pre-existing.
Doesn't matter. Okay.
No, as long as you've had credible coverage within 63, and that could even be a short-term plan.
I see. Okay.
Okay. Option number two is an alternative way to
Well,
get
real quick, Caprice. What does that normally cost then for the risk adverse
Sure.
in ballpark? Yeah.
Now, it depends on the state that you live in.
Okay.
And the area, the zip code that you live in, and if you're a male or female.
Really? Wow. They get that granular, huh?
So in Medicare supplements, there's standardized plans. They're recognized by an alphabetical letter. So any carrier that's selling, say, a Medigap G policy, doesn't matter which carrier is selling you that policy, the benefits are exactly the same. So the big secret here is you don't want to overpay. So just because your neighbor's on Humana doesn't mean Humana is the best plan for you, because cost is the only real difference between one Medigap policy with the same alphabetical letter as compared to
Okay.
So cost-wise, it depends, again, as I said, on the state. In Kansas here, we're a attained age state. That means the premiums can go up every year as you age. Missouri, on the other hand, is an issue age state. So the premium doesn't go up as you age. Now, in both states, you could get a rate increase due to rising healthcare costs, inflation, but in Missouri, it's just because of that, not because you continue to get older.
Got it.
So in Missouri, the rates are higher than they would be in Kansas on a Medicare supplement plan.
What's
So
a ballpark? Yeah.
a ballpark plan. Now, I'm a big believer in the Medigap N plans. I feel long-term, your rate stability is going to be better in that plan. But in a Medigap N plan, now you probably don't know these, but Medigap N plan, the beneficiary with that plan would be responsible for the Part B deductible under original Medicare. So this year it's $203 annually. So that means I go into Medicare, I go to the doctor's office, I have a lab test that falls under Part B. I will pay the first $203. Once that's met, Medicare pays 80% of my medical costs, and the supplement's picking up the other 20%. But if I'm on an N plan, I could have some office copays, but they're capped at $20 or less. Okay,
nice.
That's an N plan. Price wise for a 65-year-old female, I just did a couple yesterday, is $80 a month.
$80. Yeah, that's not bad. And it's covering a lot. Sounds
In
like.
Missouri, you're looking about $121 for an N plan. Okay. A Medigap G plan, that plan doesn't have office copays. The member would only pay the first $203 of medical bills, and then everything else is covered for the rest of the year. That pricing, you're looking about 110 in Kansas, and Missouri, you're looking at 135.
Okay.
And that's females. Males are more expensive than females.
Right. Typically. Makes sense.
Okay, so that's option one, number one. Again, it's for people who like predictability.
Okay.
There is no networks. I can see any provider in the US. So if I want the flexibility of going to the Mayo Clinic, MD Anderson, I can do that with the original Medicare because your primary insurance is Medicare. The Medigap policy is just paying out-of-pocket costs. There is
Got it.
no networks. So people who travel, who like the flexibility of seeing any provider they want. So that's one option. The second option, which is the fastest growing option today, is the Medicare Advantage plans, also known as Part C.
Okay.
So sorry for the confusion, but there's all these alphabetical letters.
I know. Well, that's why people need a health insurance agent or a broker, right? Because it is a lot. But go ahead, go into C. Let's hear about Medicare
Part
Advantage.
C is a Medicare Advantage plan sold by private insurance companies who have contracts with Medicare. So Medicare will pay them a fixed fee every month for every member they enroll into their plan. In a Medicare Advantage plan, you're getting your Part A, which is your hospital coverage. Part B is your medical coverage. And most often you're going to get your Part D, which is your prescription drug plan. It's all built into one plan. But instead of the government being responsible for your care and the cost of your care, you have transferred that risk over to a private insurance company to manage. Okay. So now all your claims are now going to that insurance company, Aetna, Blue Cross, Humana. There's many different companies out there competing for that business. Now, in a Medicare Advantage plan, unlike original Medicare and a supplement, those are one-year contracts. So when you enroll into a Medicare Advantage plan, it's for the current year. And then in the fall, you'll get notified of any changes that they're making on their plan, co-pays, max out-of-pocket, etc. So in a Medicare Advantage plan, you are capping your max out-of-pocket. Could go up to $6,800 or less per calendar year, depending on the carrier. They'll have networks. So you do want to make sure your providers are in their networks. Some will be HMO networks, which are health maintenance organizations. There is no out-of-network coverage. Other carriers are PPO networks, which means you have flexibility of going in or out of network. Obviously, you want to stay in network because your costs will be less. But but I do have the flexibility of seeing a specialist outside of that network if I so desire. As I said, they do have a max out-of-pocket. And often in a Medicare Advantage plan, you're getting value-added benefits not covered by Medicare, by original Medicare. Medicare is about diagnosis and treatment of medical conditions. It's not about prevention.
Interesting.
So a lot in a Medicare Advantage plan, you're going to see benefits that are focusing on prevention, such as the physical. Medicare doesn't cover physicals. They cover wellness visits. Medicare doesn't cover dental, but in most Medicare Advantage plans, you're going to get dental benefits. So you can go get your teeth cleaned and checked every 6 months. Medicare doesn't cover hearing. If it's medically related, yes, I have wax in my ear. Medicare would cover that. But if I'm losing my hearing and I need a hearing aid, Medicare doesn't cover that. But you'll see that benefit in a Medicare Advantage plan. Also, Medicare, the big things that seniors love are the fitness programs that you see in Advantage plans that you get a free membership. So seniors do love that. Plus, the Medicare Advantage plans are low cost. You still have to pay your Part B premium to Social Security every month. That's a fixed cost for the beneficiary. But you enroll into a Medicare Advantage plan, most of them are zero to very low costs per month. So
really?
In a Medicare Advantage plan, you're paying as you go.
Got it. It sounds more like traditional health insurance almost.
It is. It's more like traditional health insurance. You have copays. Most Medicare Advantage plans don't have deductibles. So a deductible is you're paying up front before the insurance kicks in. Most of them they have copays. You have a copay for a doctor's visit. You have a copay for diagnostic tests. You have a copay per day in hospital.
And then there's just a max out of pocket. Is that what you're saying?
And there's a max out of pocket per calendar year, and then the insurance kicks in, and then it restarts all over again in January. Now, Medicare Advantage plans, the networks are getting better. There's some of the carriers that have national networks now. which is great for people, because always in the past is if I travel, I have 2 homes in 2 different states.
Right.
I don't want to worry about networks. But now you're seeing several of the carriers with national networks that you have that flexibility. Um, Also, um, you don't have to pay an extra premium for your drug plan. And people like that, if they don't take medications or very inexpensive medication, they don't
Good
want to pay
point.
for a drug plan. And Medicare says if you don't have credible drug coverage, either as a standalone drug plan or built into an Advantage plan, you will be paying a penalty of 1% every month for not having credible coverage.
Hmm.
That's a cumulative penalty, and it gets added on to a premium of a drug plan in the future.
Wow. 1% of what? Of Medicare cost or?
No, 1% of the national average of a drug plan. So in
Wow.
2021, it's about $35. So you'd be paying 35 cents a month for every month you don't have credible
Hmm.
coverage. And you can't just enroll into a drug plan when you want, right? You
You have to
have
do
to
the open
either do
enrollment.
it
Yeah.
at open enrollment, right? So,
Wow. Boy,
so
there's a lot of nuances here. I thought stock and bonds and retirement planning, which there are a lot of nuances, but this is a whole nother animal. So thank you so much. So give me maybe 2 or 3 of your best practices or tips for people, whether they're retiring before 65 or getting into Medicare. What are some no-brainers that you suggest for people?
my recommendation is to speak to somebody,
Mhm.
right?
Sounds like it.
Um, just don't assume that you know everything.
Yeah.
Talk to a professional in that area to get to know what your options are, and just don't dump into the lowest cost option. You
Right.
need to, in either option, under 65 or over 65, um, you need to look at what your healthcare needs are. Okay, so caution to be the driver there.
Yeah,
Well, the
absolutely.
total cost, you should be looking at the total cost, not just the premium of a plan.
Right.
Okay.
Right.
And also review it regularly. You just don't, because your needs change. Your needs change over time,
Good point.
and
How often? Would you say every year you review it
every
then?
year you
Every
should be
year?
reviewing it. You're getting rate increases on your insurance every year, and just don't assume that the plan that you're in this year is going to be the best fit for your next year. There could be new competitors, new plan designs. Um, so I would just be reviewing my insurance on a regular basis.
Got it.
So those
That's
would be my
good.
3 tips.
Yeah,
Okay.
yeah, no, that's really good. Are you seeing, so you mentioned how Medicare Advantage is very popular right now. So are you seeing more of your clients getting on Medicare Advantage or sticking with the
I got
other?
this, I got this question the other day. As a broker, we're not allowed, we have to be um,
Neutral?
neutral.
Yeah.
There's really not one better option than the other. They're just different. It depends on somebody's, as I said, particular needs. I had a client that was on a short-term plan for 5 years. She didn't have any health care needs, and she just wanted an inexpensive insurance. She went on Medicare in November, and then I put her on a Medicare Advantage plan. I thought, oh, that's a great cost. It doesn't cost her anything. She's healthy. Then she started to get her physical, and she started to get some tests done, and she didn't want to have co-pays for everything she was doing. So she wanted to go back onto a supplement. She likes the ease of supplements. Um, so that's one case. On the other hand, I had a client just yesterday. He's on a supplement plan, and in January he was diagnosed with Parkinson, and then had to go to the ER department and had surgery. He had a colon issue.
No, I'm
If he had
sorry.
been on an Advantage plan, that would have cost him quite a bit. Okay, so thrilled that he's on a Medicare Advantage plan for peace of mind. So when you're looking in the Medicare market, not just looking at your needs right now, but what they could be as you age. Because the thing is, Medicare supplement plans are underwritten plans. So it's great when you start on a Medicare Advantage plan. They sound great. You're getting a lot of visits, doesn't cost you a lot, and you're not using it much. But what happens, like my client the other day, all of a sudden now it's going to have a lot of health
Right?
needs and wants to go back over to original Medicare and buy a Medicare supplement plan. He's going to be declined, because Medicare supplement plans have nothing to do with the government. They're just insurance companies helping you pay your out-of-pocket costs, and they have the right to accept or decline you
Hmm.
based on your healthcare needs. As long as you understand that, you are taking a risk to go with Advantage plans. But those Advantage plans are very attractive these days.
Right. No, thank you.
If
That
you're
does make a lot
healthy.
of sense. Yeah. What's that?
If you're healthy,
If you're healthy, right? Yeah, but you're risky. You're rolling the dice. So yeah, that's a
you are rolling the dice.
that's a good
So,
point. So
um,
yeah,
and a lot of people, after a while, hate dealing with insurance companies. Insurance companies are about controlling their costs.
sure. Yeah,
So
they're
you're
in
gonna have
business
to
to
get
make money. They don't want to
pre-authorized,
pay
right?
out money. Right.
They will have you do pre-authorizations. They're going to have you try lower cost treatments before, and that's not true with original Medicare. You're entitled to those benefits. If I need a PET scan or a CT scan, you just go get it. If I want an Advantage plan, I'm going to have to get that authorization first,
Yeah. And that's
right?
frustrating. Sure. I'm sure that
It
is
can be
frustrating.
frustrating. So
Interesting.
it depends
Thank
on
you.
the person, right?
No, thank you so much, Caprice. This has been very informative. And if any of you out there are listening and want me to share Caprice's info, feel free to send me an email, simply at jake@falconwealthadvisors.com. That is all the time that we have this morning. We are recording this on a Friday, though. Caprice, you have any plans over the weekend?
I'm working on my taxes.
All right, fun stuff. Well, good luck. Good luck with that. I'm going to try to play some golf. The sun is shining in Kansas City, so hopefully I can get some exercise out there. But thank you so much for your time this morning, Caprice. We really appreciate having you on the show.
Welcome.
And certainly, if any of the listeners or viewers have any questions for Caprice, I'm happy to share her contact info. Like I said, have a safe and great weekend, and thank you so much for tuning in.